I'm joined now by Alan Brockstein, publisher of 420 Invest. Alan, welcome back.
Hey, how's it going, James?
Well, I would say that I've seen greener pastures, but it is what it is the other cliche that I've got to resort to here. What are you seeing in the cannabis space in this historical days of market rout?
Yeah, well, we're definitely taking a back seat to the overall market conditions. And, we've been talking about this for a while, James, regarding the challenges for the industry in terms of capital availability. It kind of really got exacerbated. I mean, it was a problem anyway, but it was exacerbated when the vaping crisis. So these crises just come, they just keep layering on. But when that thing hit in the fall, it really hurt the ability of these companies to raise capital. And so in October, I shared with my subscribers kind of a one by one on the names I follow closely, kind of, where they're positioned in terms of risk with respect to raising capital. And then I had to update it. I think it was just this last month in February. So we're definitely, unfortunately, we're seeing yet another huge problem, right? Because when the whole world is burning down, nobody cares about the cannabis sector. And so this week's been especially telling. We saw Harvest blow out their stock price by announcing a partially done deal at a significant discount to its prior low. And then we saw today Tilray, and this is unbelievable to me. I mean, I've been negative on Tilray and worried about their statements that they had enough cash to make it through this year. That doesn't seem plausible until today. But so that if you didn't see the exact pricing, and to put it in perspective, it was a $17 IPO, and then it obviously went to $300. They had done a private placement at $7.10 in just 2 years ago, ahead of going public. And now one has to wonder if ever that stock can get up there. Ever is a long time, of course, but hopefully they have their capital in hand now, so that enough to bridge kind of their shortfalls. But this is incredibly dilutive. We've gone from a very tight float stock, if you recall, that being almost entirely controlled by formerly privateer, to now one where there's a whole bunch of shares that just hit the market and a lot of warrants not far behind.
Mm-hmm. So I guess this is sort of part and parcel of a general market revaluation, discount to the downside based on a collapse in investor confidence. What are the stronger companies that you think, in an effort to look on the bright side, where are the companies that you are not worried about, that you think will be able to weather a storm by virtue of a solid cash position and essentially a stable business?
Sure. In Canada, I've had a really hard time really understanding the potential of Kronos Group, following it since its early days when it was PharmaCann. But I have to say, the worse things get, the better that company seemingly would look. I have never advocated buying it, but it's trading very close to its cash value now, and there's no debt. There's a few liabilities. With that said, brace yourself for a really bad quarter that's going to be announced. God knows when. It was supposed to be. They're late, and they could remain late. So, industry, nothing ever goes smoothly. But that's one in Canada that I think people should be aware of. In answering your question, it seems very unlikely that they'll have a cash situation. And I would say as well, adding to that, two others that have done capital raises and that, in the past have generated earnings or positive cash flow are the extraction LPs, Valens and Metapharm Labs. So those two would seemingly be at a lower risk than many others that, especially in Canada where the operational cash use is just off the charts still. So, trying to find companies that don't have debt and that have relatively large cash balances and or small cash burns. Those are the three that pop up in my mind. In the United States, a little more tentative. things have always been a little bit harder for these companies to raise capital. They didn't have the luxury of it being thrown at them the way it was in Canada. And so now what we're seeing is, all the big four, as I like to call them, which would be Cresco, Curaleaf, GTI, and Trulieve, all of them have made new all-time lows. They've all been the same strategy lately, which is we're not going to sell our stock down here. We're going to raise debt capital. Maybe we'll issue a few warrants. That's been a while since they've issued those warrants. And obviously an even bigger phenomenon has been the sale leaseback. So these guys have been able to access capital, but it's not free. They're going to pay higher costs because they're renters now. And on top of that, if things stay really bad, they don't have an asset that they can sell. They're doing that now. But things are kind of challenging. So I think there's, it's really interesting because I think all four of these companies should emerge, and they're going to face a lot less competition if market conditions remain unfavorable. And I would, to just call out among those four, obviously, you take a look at Trulieve, and they have positive cash flow and positive earnings. But there is some debt there. And then I would also call out Liberty Health. The stock's bounced off of its bottom. It pretty much doubled, but it's pulled back close to those prior lows. It's been outperforming the market, but that's a good fundamental story, or has been a good fundamental story. They sold some assets. They have cash on their books now, a little bit of debt, but more cash than debt, and they'll take care of that debt. And they're very focused on just a single state. It's not a complex story, and they have generated positive cash flow, I think, for 2 straight quarters now. So that's another one that seems at the cusp of success.
Sure. Do you think that the coronavirus crisis, in that it is a respiratory affliction and a lot of the cannabis products are ingested through the services of the lungs, do you think that the crisis is actually going to have a direct impact negatively on sales of cannabis products around the United States and Canada?
No, I don't think so, really. It's, the numbers are pretty small, James, in terms of, it could get worse. So I want to be careful about that. But hopefully, all the steps that are being taken in cities across the nation, and I just saw President Trump declared a national emergency moments ago. Hopefully this will keep it from becoming like Italy. And even if we become like Italy, it's temporary, right? So I don't think it's going to be a huge issue. As a matter of fact, there's been some evidence that people are worried about access. Like, gosh, I don't know what it's like in other places, but here in Houston, the grocery store, all the frozen goods and canned goods are being bought in mass. And so the same thing's going on, apparently, to a lesser degree, though, with cannabis. So there may be actually a short-term lift, but I don't think that's the part that's worrisome. What's worrisome is the impact on the ability to raise capital. Remember, there's already a huge capital crunch going on. Even before this financial crisis just developed, this was already a problem. So that's the main impact of the coronavirus. It's not necessarily a top line issue. It's a financial issue.
Mm-hmm. Okay, so then what's your counsel to individual investors as it pertains to cannabis stocks at this point?
I'll pull a Will Rogers. Don't buy them a few months ago. No, unfortunately, you have to live with your prior decisions. And one of the things I try to warn people about all the time is this is a very volatile sector, and a lot of unproven companies, obviously. Even like the one with the highest market cap, Canopy, is unproven. Let's just agree on that, I think. And so what I try to counsel people is just don't put all your money into this sector. It's really bad portfolio management. And I hate to discourage people because maybe things will triple like they did a year ago off the December 2018 lows, triple in some names, I should say, not the whole market. So I don't want to talk anybody out of big gains, but just seems like we're fighting a lot of battles. And James, what I've told people is at the beginning of the year, I said, I don't think the first part of this year is going to be great because we have people that are underwater on their stock that will sell into rallies. We have companies that need to raise capital. We have founders and early investors sell into strength. So that whole confluence of sellers, I thought needed to be cleared. I mean, I have to confess, I did not envision this kind of market. I don't know who did. I'm sure somebody did, but it's been obviously a lot worse than I would have expected. But I still think the news flow should get better later this year, but we really need this financial crisis to be behind us, I think, before one can be really confident in investing in our space any more than they're already invested.
You bet, Alan. Well, great contribution as usual. Thanks very much for joining us today. We'll come back to you soon.
All right, take care, James.